This is a British pound versus New Zealand dollar. So what we are looking at right here is the 4 hours time frame, which is the bigger time frame. And this is one of the trades that I've been managing. I am on in this trade, and I just want to explain something right here. Uh, about this pattern. So as I always say, if you see the market moving impulsively like this, the market will create a pattern which is an uptrending structure, of which an uptrending structure is a continuation pattern to the downside. So right here we can already see how the market moved from these levels right here. The market moved impulsively to the downside, and now the market has created an uptrending structure, of which that uptrending structure is a continuation pattern to the downside. So right here the market is indicating to me that it is not done um, moving to the downside. So the market still has that responsibility to break out of this structure and continue moving to the downside, until we complete that 90% rule of this structure. So this is what has been happening on each and every pattern that I get myself involved in. So we will see the market moving impulsively like this, and then the market will create some sort of an uptrending structure like this. And then after creating that structure, the market will continue to move and break out of that structure, continue to move to the downside. So this is what is happening on this trade. Also, the same thing when we are in on the situation of an trend impulsively of that uptrend. The market will create a downtrending structure like this, and then break out of that structure and going to continue to move to the upside. So these are the kind of structures that I get myself involved in. So right here we can already see what is happening on this current market. We can already see that we have already completed that first movement of this thing. If I can just hide these colors right here so that we don't get confused. Okay, that's picture perfect. So how I go about managing this trade is that if I can, actually, let me just explain how to find a trend line. If you can already have your first touch and you have your second touch right there, you have a trend line. If you have a first touch and then you have a second touch, it automatically becomes a trend line. But then right here on our second touch of the upper trend line, this to me, I don't count it as a second touch. I count this one as a second touch. Why? Because right here the market touched here, but then the market did not come down to touch that lower level of the trend line. So if the market moves like this, we have our first touch, and then boom, we moved, we have our second touch because of this trend line right here. Boom, we moved back up again, we touched that level, right? So if the market touches this level and then doesn't come back to touch this level, I don't count this one as a second touch. I will count this one as a second touch because after this touch right here, the market moved to the downside to come and respect this lower level of the trend line. And then we moved back up again for that third touch, right? This was supposed to be the high probability entry for me. It was supposed to be the high probability entry for me. But I waited because I wasn't in on the charts. I missed this entry point. So the market also so the market continued to make its moves, and then made its moves, and then the market created a structure again, So these are actually multiple confirmations, these are multiple confirmations. So it just simply means that the probability of this overall structure has just increased, So the market also gave me another opportunity to enter the market because we had that first touch there, we had the second touch there. The third touch will always be our high probability to enter the market. So I entered the market right here on these levels and then moved down with it because I already know that if it's an uptrending structure like this, the market will always break out of this structure to the downside, So we broke out of this inside structure. We also had another opportunity to enter the market right here, because this was also another structure. These are called inside patterns, So if I can just move to the 1 hour time frame so that we can just see properly these inside structures. Um, this was also a continuation pattern, This was also a continuation pattern. We had our first touch, these touches there, second touch is there. So we had our first touch, second touch, third touch was a breakout, because we already saw on the higher time frame where the market has to go. We already saw the overall movement of this market. So on this chart right here, what we will be looking for, we will be looking for sales only, because the overall trend of this market is a sell, So on these lower time frames like the 1 hour, we will be looking for sales only, So the market broke out, continued to move to the downside, but I didn't really get involved here because I wanted to wait for the breakout of the overall structure. I don't trade the breakout of the inside structures because anything can happen on the inside structures, I only trade the breakout of the overall structure. So what is happening right now right here, the market created some sort of a region right here, which are the zone we call they call them the zones. So what is happening right here, the market rejected this level right here, and then also rejected right here, moved up to the upside, and then came back down and broke out of these levels. Right now the market is on that level which I spoke about, the third touch of the lower trend line. So the market still has that responsibility to push back to the upside to retest this level. When the market goes up to retest that level, I will have that another opportunity to enter the market from these levels, continue to move to the downside, break out of the structure, continue to move to the upside, come back and retest this level, and then continues to move to the downside, So the market will break out of this structure and come back to retest this level also, So this is what is more likely to happen to this trade, And then we're gonna continue to move to the downside until we complete that 90% rule of the structure, So the market has that responsibility to reach this level. We have to reach these levels, and then this will be my exit point, When the market reaches this level, it might continue to move to the downside, but this is one of my rules. I will exit the market when the market reaches this point,